Welcome to this explainer. Okay, we're jumping right in today because the big three memory giants just shattered the $1 trillion combined market capitalization mark. Artificial intelligence is sparking an absolute, unprecedented, multi-year semiconductor supercycle. While everyone else is arguing over which AI model is the smartest or if NVIDIA's stock price makes any sense at all, there's this massive debate brewing under the radar. Because the one thing quietly deciding how fast AI can actually run, it's the memory sitting right next to the processor. So, with a massive wave of factory expansions on the horizon, we really need to figure out, are we tracking toward absolute market dominance for these companies, or an inevitable trillion-dollar supply crash?
$100 billion. Let that sink in for a second. That staggering number is the projected market value of high-bandwidth memory, or HBM, by the year 2028, straight from Micron's investor relations. We're talking about nearly tripling from where we are right now. The big takeaway here is that memory is no longer just some cheap niche commodity component you slap into a PC, not anymore. It's literally the absolute core of AI infrastructure, making up roughly 30% of what tech giants are currently spending on data center hardware.
Section 1. The AI memory bottleneck. To wrap our heads around this explosive growth, we first have to look at the fundamental technical constraint that's literally choking AI right now. In the industry, they call it the memory wall. See, AI doesn't just need raw compute power. It needs to move colossal amounts of data millions of times per second. Imagine your GPU is the world's absolute fastest chef. This guy can cook 10,000 dishes a minute. But traditional DRAM? That's just a single pantry helper, slowly fetching ingredients one bag at a time. Suddenly, your superstar chef is just standing around waiting. High-bandwidth memory changes the game entirely. It gives that chef 50 helpers, all working simultaneously, rushing through a much wider door. It completely solves the bottleneck.
And the financial reality of solving that bottleneck is just wild. When you look at the 12-month forward revenue growth versus the year-to-date price returns for global semiconductor stocks, memory makers are leaving everyone else in the dust. skhynix and Micron are drastically leading the pack. Micron's revenue jumped nearly 3 times year over year, and skhynix is seeing their operating profits driven almost entirely by this specific high-bandwidth memory. They are the ones physically enabling the entire AI boom.
Section 2. The trillion-dollar oligopoly.
So, who's actually cashing in on this? Well, we're looking at a massive structural shift in the market. Today, just 3 companies, Samsung, skhynix, and Micron, control over 95% of global DRAM production. Think back to the 90s, there were about 20 suppliers. But decades of brutal boom and bust cycles completely wiped out the weaker players. What's left is a highly concentrated licensed oligopoly holding all the winning cards in the AI supply chain. And making these specific HBM chips, it's incredibly difficult. They're literally stacking memory chips on top of each other like floors in a microscopic skyscraper. Because that barrier to entry is so insanely high, these 3 are practically printing money right now.
But here's where things get kind of weird. Despite crossing a combined $3 trillion valuation and seeing this unprecedented demand, these memory makers are trading at just 7 times forward earnings. 7! That is a massive gap compared to the 26 times average of the broader semiconductor sector. Wall Street is looking at these huge profit margins and basically saying, yeah, we don't buy that this will last. So why the heavy skepticism?
Section 3. Hyperscalers lock down supply.
To understand the bull case and why some analysts are calling this a total structural paradigm shift, you just have to look at the tech giants, the hyperscalers. They are desperate. The supply of this advanced memory is so incredibly constrained right now that giants like Google, Microsoft, and Amazon are flat out panicking. They're taking unprecedented steps. For instance, Micron's 2026 capacity completely sold out. Buyers are locking in 5 years supply agreements, which is basically unheard of in such a historically volatile industry. Even wilder, they're handing over 10 to 30% in cash prepayments up front, just to guarantee they'll actually get chips in the future. It's wild.
The demand is so durable that we're seeing physical infrastructure deals meant to last decades, all based on this exact compute need. Meta is literally out there securing long-term nuclear power supply agreements. They're aiming for 6.6 gigawatts by 2035 just to run these memory-intensive data centers. The power market and the memory market are pricing in the exact same AI demand story. It is an absolutely incredible convergence of energy and silicon. So just when it seems like this supercycle is an unstoppable force of absolute market dominance, right? Locked-in contracts, nuclear-powered demand, it sounds foolproof. But we really have to look at the other side of the Wall Street debate. Is this a brand new paradigm, or is the pendulum about to violently swing back? Section 4. The bear case.
An inevitable supply crash?
Remember that low 7x valuation multiple? It exists for a reason. Historically, the memory industry is famous for brutal, unforgiving boom and bust cycles, and there are some genuinely terrifying risks looming on the horizon. First up, double ordering. When supply gets this tight, panicked customers start ordering twice as much as they actually need just to make sure they get something. If AI spending takes even a tiny pause, an inventory glut forms overnight. Second, alternative hardware architectures like SRAM could start eating into that premium HBM pricing. Third, the massive wildcard, Chinese domestic memory. If companies like Huawei manage to bypass export blocks and crack HBM technology themselves, that tight oligopoly shatters. And finally, if enterprises stop seeing actual return on investment in AI, hyperscaler spending is going to decelerate fast.
And you know what? We already got a glimpse of this extreme fragility when Google announced TurboQuant, a software algorithm leap that drastically reduced the memory needed for AI inference without losing accuracy. The market completely panicked. $90 billion in memory market cap was wiped out in a single day. $90 billion. Sure, the market recovered, but it proved a really scary point. In an era of rapid AI iteration, one single breakthrough in software efficiency can instantly destroy assumptions about hardware demand.
Furthermore, the supply side is gearing up for an absolute explosion. These companies are taking all those massive profits and building colossal new factories. Micron alone announced a $200 billion expansion plan. But history shows us time and time again that the exact moment a massive wave of new capacity comes online, which is expected right around 2027 or 2028, the transition from shortage to oversupply happens in the blink of an eye. And historically, that is exactly what causes prices to crash.
This historical reality is exactly why market veterans are sounding the alarm. Andrew Lapping from Ranmore Fund Management hit the nail on the head when he warned that a leopard rarely changes its spots. He's reminding investors to be super cautious in an industry famous for mediocre long-term returns, and this sentiment is being echoed by major heavy hitters. Legendary hedge fund managers like paultudorjones are actively establishing short positions against companies like Micron. They are betting heavily that the cycle hasn't been defeated at all.
So, as the physical infrastructure of the AI revolution gets built out deal by deal, contract by contract, the ultimate question remains. The memory market has completely transformed from a basic commodity business into the strategic bottleneck of the 21st century. But will this time truly be different? Will these companies cement themselves as high-margin structural giants? Or, with that massive wave of factory expansions on the horizon, is the industry blindly accelerating toward an inevitable trillion-dollar supply crash? I'll let you decide. Thanks for joining me on this explainer, and definitely keep your eyes on those data center CapEx reports.